Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Welcome to second PUC accountancy online classes. In the previous class we have covered the entire theory part. What is the accounting procedure, how to prepare different ledger accounts, isn't it? Now let us move on to the practical part, 12 marks problem. Take your question bank. Question bank, page number 67, problem number 1. I will read the problem and let us analyze and solve the problem. Suvarna and Sunanda are partners sharing profits and losses equally. That means one point is clear, their profit sharing ratio is equal, 1:1 or 1/2 and 1/2. Their balance sheet as on 31st March 2018 was as follows. Balance sheet given, bills payable, creditors. Now we have to bifurcate which is internal liability and which is external liability, because we have to transfer only internal liabilities, is it, or external liabilities? External liabilities, yes. We have to transfer only external liabilities to realization account, isn't it? So, bills payable, external, creditors, external, Sunanda's loan. Just see whether Sunanda is a partner of the firm. Yes. If she is a partner of the firm, any loan given by her is nothing but that is a internal liability. So, Sunanda's loan should not be transferred to realization account, because Sunanda being a partner, any loan given by her is an internal liability. Remember. Then reserve fund, as I already told you, like admission and retirement, reserve fund should be distributed among the partners in their profit sharing ratio, which is equal, correct? Equal share, so 1:1. Then capital is given, so that is by balance brought down in the capital account as we dealt under admission and retirement. Come to asset side, cash at a bank, whether it should be transferred, whether it can be sold in the market, no. So what we have to do is we have to ignore it. That is the starting balance of cash account. We are preparing here, we will prepare cash account, isn't it? Is it? Cash at a bank. So we will prepare bank account and all entries should be given as bank, not cash, remember. So that is the starting balance of this bank account. Which balance it is showing? It is on the asset side. Cash at a bank is on the asset side. All assets shows debit balance, right? So two balance brought down. Then debtors, there is a provision, PDD is there. So debtors should be transferred at gross. We have to transfer 55,000 to realization account, and what about 3,000 PDD should be transferred to the credit side of realization account along with creditors and bills payable, correct? Yes. Then stock is there, furniture is there, machinery, buildings, all these are tangible assets, correct? Tangible assets. Profit and loss account, what is this? Accumulated loss. What we have to do is we have to transfer it to partners capital accounts. Which side? This is on the right hand side of balance sheet. To the capital accounts of partners on the left hand side, opposite side, we have to transfer to profit and loss account, accumulated loss, correct? Yes. Then on the above date the firm was dissolved. The following information is available. The assets realized as follows: debtors, stock, machinery, buildings, furniture. 5 assets. Debtors, stock, furniture, machinery, buildings. Only 5 assets were there. All being sold. No headache for us. Straight away writing the same values. Remember, at the beginning, while transferring the assets to realization account, don't see the adjustment. If you see the adjustment, you will get confused. So, don't see the adjustment. Whatever value is there in the balance sheet, write the same thing. And while realizing the assets by bank on the credit side, don't see the balance sheet unless it is mentioned. If it is not mentioned, you have to see the balance sheet. If it is mentioned clearly, then don't see the balance sheet figures, you will get confused. Clear? So, whatever value is given, write the same value as realized. That's all. Then, creditors and bills payable were paid at 5% discount. That means, don't deduct 5% and write the remaining amount. No. Yes, that is what you have to do. What the students will do is, they will calculate 5% and they will write that 5%. No, that is not the meaning. They deducted 5% and the remaining amount is paid. How much amount is there? Creditors 50,000. So 5% means 2,500, correct? So deduct 2,500 and pay the 47,500 remaining amount. You have to make payment to bank. Liabilities paid off, creditors 50,000 minus 2,500. In outer column 47,500. Students mostly they do like this, creditors 2,500 in outer column. That is not the way. Remember this. Clear? Then bills payable also same thing we have to do. Then dissolution expense amount to rupees 4,000. So expense or realization on the debit side to bank, expense or realization. That's all, nothing else. So let us solve the problem. Very simple problem it is. Realization account, ledger account. Realization account. Realization account. Don't write revaluation account. Make sure realization account. Yes, debit credit particulars, amount in rupees, provide for JF column also, particulars, amount in rupees. Provide for JF column. Clear? Yes. Do it fast. Over. Yes. Let us start. Transfer all the saleable assets. The assets which can be sold and money can be realized. Write only those assets to debtors account. How much? 55,555. Refer old balance sheet. Don't see the adjustment now. To stock. To stock account 40,000. To furniture account, how much? 15,000. Write it. Machinery account, how much? 25,000. Then what? Buildings account, right? Buildings account, how much? 81,000. Is that correct? Yes, that's all. All the assets were transferred. Don't ask me, sir, why didn't you transfer cash at bank? Because cash at bank cannot be sold in the market. Clear? Yes. Now, transfer all the liabilities on the credit side. Various liabilities account debtor to realization account. Sundry liabilities account debtor to realization account is the journal entry. So, by bills payable account, write the amount 10,000, correct, 10,000. Then creditors account, how much? 50,000, right? Yes. There is, see, while transferring the debtors, I have transferred 55,000 gross debtors. Actually, net debtors were 52,000, correct? So, you have to transfer better in the examination. While writing the debtors itself, you just transfer it to credit side by PBD account, PDD account. Otherwise, you will forget and there will be a difference. Clear? So, by PDD account, provision for doubtful debts account, 3,000. Yes. All the assets and liabilities being transferred. Now, move on to the next step. What do we have to do? Now, let us sell these assets. Without selling these assets, you cannot make payment to these liabilities. Am I correct? So, sell these assets. So, when you sell the asset, cash comes in, increase in the asset, debit, bank account is to be debited, isn't it? Bank account debtor to realization account. So, by bank account. We cannot pass cash entry here. We cannot pass cash account because cash in hand is not there in the balance sheet. So, we have to stick on to bank only. Only cash at a bank is given. So, make sure pass only bank entries. By bank account, right there under that assets realized. Now, refer your adjustment part and write how it is being realized. By bank, write one by one. Debtors 52,000. Written. Stock 39,000. Write it. Then machinery 24,000. Buildings 75,000. Then what? Furniture 13,000. Furniture 13,000, right? Anything else? No, that's all. So, take the total and write in outer column. 2,03,000 is the total. 2,03,000 assets realized, right? Now, make payment to liabilities. After getting the cash, make payment to those to whom we were supposed to pay, isn't it? So, to bank. Liabilities paid off. Right under that, one by one, liabilities, creditors, right here, 50,000 minus 5%, right? Minus 2,500. 5% means 2,500. So, 47,500. Then what? Bills payable. 10,000 minus 500. Right? So, 9,500. 10,000 minus 500 because 5%. Yes, 9,500. Now, there is a expense, right? Realization expense. So, to bank expenses of realization. Expenses of realization. How much? Expense of realization or dissolution expenses, isn't it? Dissolution expenses and realization expenses both are one and the same. Remember this. So they may give you dissolution expenses or cost of dissolution or realization expenses. All are one and the same. 4,000, right? Now, take the total. Which side is greater? Roughly calculate. Debit side is greater than credit side. Debit side is greater than credit side. That means there is a loss on realization. So, write a total here. How much? 2,77,000 is the total. 2,77,000. Yes. What's the difference? 11,000 is the difference, correct? 11,000 is the difference. So transfer it to all partners capital account. By all partners capital account because all were there in the business, correct? All were there in the business till the date of dissolution. All partners capital accounts. Under that there are two partners only, equal share. So name is Suvarna and Sunanda. Suvarna and Sunanda. Share it among them. 11,000 into 1 by 2 is equal to 5,500. This also again 11,000 into 1 by 2 is equal to 5,500. That's all. Loss on realization. Loss on realization. Don't write account. Loss on realization balancing figure. That is what you have to do. It's done. Realization account is done. Remember friends, minimum 5 marks. Minimum 5 marks. Sometimes it may be 6 marks also. So, very easy. Compared to admission and retirement, it is far better. Correct? Very easy. Easily anyone can score in this concept. Right? Yes. Now, let us move on to the next part. It is combined capital accounts of partners. Combined capital accounts of partners. Yes. Yes. Only 2 partners were there, so only 2 columns enough on either side. Yes, debit credit is a must. It's an account. Then particulars. Suvarna, I will write SR, write in full, and Sunanda, I will write here SN, or rupees, you just write in full. Particulars, Suvarna and Sunanda, rupees. Draw the columns. Yes. Now start with the balance, refer balance sheet. On the liabilities side, Suvarna, Sunanda, capital balance is given, right? All liabilities will have which balance? Credit balance. So by balance brought down. By balance brought down, write the amount 60 and 80, right? 60 and 80. Then refer balance sheet. On the liability side there is reserve, I think, yes, reserve fund is there. Distribute it among the partners by reserve fund. 1:1. 1:1 reserve fund. 15,000 is there, so 7,500 each. 7,500 each. Then comes, what is the next step? That's all. There is a loss. All partners capital accounted to realization account. So all partners capital accounted to realization account. Realization account. Loss on realization. Loss on realization. Refer your realization account. On the credit side there is a loss 5,500, isn't it? Then what? Anything else? There is an accumulated loss in the balance sheet on the asset side. Refer asset side, profit and loss account. 12,000 is nothing but accumulated loss should be transferred to debit side, isn't it? To profit and loss account. Profit and loss account 1:1. So it will be how much? 12,006 and 6. 6,000 each. Then what else? That's all. Close the account, close capital accounts and transfer and make final payment. Make payment, no need to transfer, no balance brought down here, simply making the final payment, that's all. So 87,500, right? Here 67,500. Find out the difference. Find out the difference. You have to leave one line gap there because one entry will come, isn't it? One entry will come here. Yes, I'll erase this and I'll write again down. $67,500 and write the same total on the other side. 87,500. Write the same total on the other side. Now find out the difference. There is a difference of 76,000. Here there is a difference of 56,000. Right there, to bank account, final payment made, balancing figure, final payment made, balancing figure, that's all. No brought down business here, we didn't carry down anything, right? So no question of brought down, don't write by balance brought down 56,000, 77, no, firm is closed, friends. Firm is no more, isn't it? So now we have to prepare bank account. Don't prepare balance sheet. Everything is sold, nothing is there with us. So no question of balance sheet. Remember, only bank account. How we have disbursed the payment. For that we have to prepare how much money we have received and how it is disbursed. For that we have to prepare bank account. That's all. Yes. Particulars, amount in rupees, write the heading. Particulars, amount in rupees, cash account, that's bank account. Refer balance sheet, cash at bank is there, opening balance, debit balance, right? All assets will have debit balances. So to balance brought down. Here you will go wrong. Most of the students, they will write by balance brought down on the credit side. So to balance brought down. To balance brought down, how much? 15,000, right? 15. Yes, refer realization account where bank entries are